Perfect. Let's get started. As all of you on this call already know, my name is Michael Petracca. In tonight's conversation, we're going to be discussing everyone's favorite topic, Social Security. Now, if you have any questions, I have the chat feature up. Just send me a little message and then I can unmute you and feel free to chime in at any time. For tonight's conversation, I'm going to flip things around a little bit. I'm going to try and give you a little bit of the meat and potatoes right up front. At the end of the day, I realize everyone's trying to make the best decision. And you hear little clips from the news, little clips from a magazine you read, you speak to Sue from the office, says X, and my cousin's doing Y. At the end of the day, to truly make a educated, informed decision on Social Security, I need about 8 parts. So I wanted to just touch on those 8 parts in the very beginning. And then from there, I'll kind of give you the Social Security 101s to kind of backfill why I need those things. First and foremost, how's your health? What's your family life expectancy? Of course, God forbid, if you got some issues that you just don't have a long life expectancy, really the other 7 are kind of meaningless. We would probably turn it on. So 1, your health and life expectancy. 2, your spouse's health and life expectancy. It's a very big, important part. Sometimes it's crucial to protect the widower's benefit, which I'll explain a little bit more towards the end of the presentation. 3, what are your assets? Did we build up a big, beautiful nest egg? Now we have the flexibility of choice and we don't have to do things perfectly. Or are we a little bit on the leaner side? Now we have to be much more calculated on what we're doing and when we're doing it. 4, what are the other incomes are at our disposal that are guaranteed? Do we have some annuity income? Do we have some pension income? Have we turned it on? What is the growth rates of those things until we turn it on? Very important factor when it comes to Social Security. 5, are you a conservative investor or are you a little bit more of an aggressive investor? If we've built this nice nest egg, well, can we factor it growing at 6, 7, 8% because we're a little bit comfortable with the stock market? Or are we really ultra conservative and we have most of our money in cash and CDs? Well, if Social Security is growing at 7, 8% and we are CD people in the long run might be 2, 3%, then that certainly factors into the equation. Another big factor when you're a couple is what's the difference between the 2 individuals' Social Security benefits? Is one of them $3,500 and the other $800? Are they closer to $2,000 a piece? That again is a very big factor in when we're turning on Social Security benefits. A lot of times I am not telling a couple to turn on their Social Security benefits at the same time. Are you working? Do you plan on doing some consulting? Do you plan on doing part-time because your spouse working? Another big factor when it comes to Social Security. And where is the markets? Something that most people don't think about is, if the stock market has recently just gotten killed and let's say is down 30, 40%, well, the upside at that point is pretty high. So if I give 2008 as an example, markets got cut in half. And over the next 12 years, stocks averaged about 15% a year. That's certainly an important factor of what's going to happen to that pool of money. Or is the stock market at all-time highs of a really big rally, trading at big multiples, and now I think it's a good time to take some profits and let the Social Security kind of just stay there and continue to grow guaranteed. All important factors. So it's not a situation where you could go, Mike, what should I do? Really, it takes me half an hour, 45 minutes. Let me get a good understanding of those 8 things. And then I could give you, in my estimation, based on logic, statistics, and probability, what is the best path for you not to run out of money and live as high as a comfortable living throughout your retirement? Now, what you will never hear me say is, I am worried that you're going to pass away early and you're not going to get every penny out of Uncle Sam. There's 2 realities that could play out. You pass away early and you could have lived on a higher budget, or you lived on too high of a budget. Now you've run out of money and are trying to scramble the last 5, 10 years of your life, and you might have to move in with your kids. Running out of money is a real problem, and you'll be here to experience it. Passing away early, you don't have any money problems. So I am never concerned about that. That is not my goal. I want you to have a long, beautiful retirement with the maximum budget you can sustain, assuming we do live a long life. If we don't, that's life. That's what are you going to do? But again, those are the 8 things that I need to make an informed decision on what Social Security strategy makes the most sense for you. I hope that helps. I kind of wanted to give you that meat and potatoes right up front. Now, like I said, I'm going to kind of give you the Social Security 101s. If you have any questions, feel free to put a little note in the chat, and then we can, I'm happy to answer any questions you have, or at the very end, I'll stay on as long as you like. So let me share my screen. All right. Perfect. So how do we qualify to receive Social Security retirement benefits? Long story short, you more or less have to work 10 years. 10 years and you'll get a check upon retirement. Now, as we know, getting a check and getting a maximum check are 2 totally different things. So yes, you'll get a check once you get 40 quarters, which is more or less 10 years worth of work. But Social Security is also going to factors in your highest 35 working years. So, I instantly remember, as you were in high school or middle school and you look at your grades, and if you skipped an exam or you skipped a homework assignment and you got a 90, a 90, a 90, and a 0, well, that 0 is going to drag down your average tremendously. So if it's a situation where, you only put in 25 years, we got 10 zeros factoring into your average. So a lot of times, let's say you're in retirement, just working part-time a little bit, you might be giving yourself some raises when it comes to Social Security. If you're replacing some zeros with, 15 grand or 20 grand, every little bit helps. So again, 10 years to more or less qualify, but it's going to factor in your 35 highest years to determine your Social Security benefit. Now, something that's come up a lot, it's been in the news, the Social Security Trust Fund, depending on when they put out a study, is supposed to run dry somewhere between 2030 and 2038, at which point the government has about 77 or 78 cents on the dollar that they could pay out. So what is this? So conceptually, the Social Security Trust Fund is supposed to have about $4 trillion, but we got more people taken out than putting into the system. So we're dwindling that trust fund, and then we just have the money coming in. Once it goes to 0, we just have the money coming in for the working people, paying out the other people, paying out the people in retirement. And we have enough for about 78 cents on the dollar. Now, this isn't one of the first times Social Security was running dry. Now, they can make tweaks to this pretty much whenever they want. Now, the first and foremost question of, is it going away? Now, do I know with any degree of certainty? Of course not. Nobody does. Now, in saying that, as we hear the new headlines of the debt ceiling and how are they going to balance the budget, what does both parties say? Oh, we're not touching Social Security. We're not touching Medicare. We're not touching Medicaid. These are things that are 60, 70% of our budget that they won't even acknowledge or touch or tweak or adjust because they know it's political suicide. So I am really not afraid of the Social Security system going away or you not getting a check. What am I afraid of? Well, all right, there's going to be a combination of what I would call hard money pain and soft money pain. I stole this from Ray Dalio. Ray Dalio runs one of the biggest hedge funds in the world. And what he's more or less saying is we have a spending problem. How do we deal with it? Well, hard money is, all right, they're going to tweak when you're eligible to get Social Security. So in the past, everyone's full retirement age used to be 65 years old. Now it's somewhere between 65 and 67 years old. So they extended it out. 2, as of right now, you're paying 6.2%, which is part of your FICA that goes towards Social Security. Well, they could just tweak that to 6.3, 6.4, 6.5. A couple points here and there, we're talking a decade increase in how long the Social Security Trust Fund will last. So they're going to increase your taxes on Social Security. So again, with the hard money, it's increased taxes and probably delay your eligibility to get the maximum amount. And the soft side of the equation, Well, that's what we're all feeling. So what is the government really doing when they say we're not touching Medicare, we're not Social Security? They need to borrow more money. When they borrow more money, they cause inflation. So, in 5, 10, 15 years or whenever you turn on your Social Security, you'll get that check. But where that check, if you went back 50 years ago, might have represented 40% or 50% or 60% of someone's budget, that number is going to be 40, 30, 20, and 10, because the check is going to come, but it's not going to keep up with inflation. Social Security is indexed to inflation at CPI. CPI typically ships out food and energy. What goes up the most? Food and energy. So the Social Security check will come, but because of inflation, it's not going to give you anywhere near the benefit or purchasing power it did in the past. So again, I'm truly not afraid of Social Security just going away, but how much we're going to get taxed to receive it is probably going to go up. When we can receive it, it's probably going to be a little bit longer. And when we do get it, it's not going to keep up with really true inflation. Again, that's my opinion of the Social Security and the headlines that are coming out now. So like I mentioned before, everyone's full retirement age used to be 65 years old. Now they have it scaled. So if you were born between 1943 and 1954, it's 66. And then it's slowly, every 2-month intervals for each year. Anyone who is born in 1960 or after their full retirement age is 67. So one of the first things the Social Security Department does is it calculates your PIA, primary insurance amount. That's a fancy way of saying the amount you're supposed to receive at your full retirement age. So that's based on your earnings. So every dollar today between $0 and $160,000 and change is taxable to FICA or taxable to Social Security. Now, let's say adjusting for inflation, you hit that 160 mark for 35 years, you would be getting the max eligible benefit. It's 4,000 and change these days. Now, let's say you earned $1 million a year for 35 years. That's nice, but you'd get the same amount as someone who made that 160 adjusting for inflation, because they don't charge FICA taxes or Social Security taxes above 160. So your earnings plus your year worked, like I said, it's 35 years that gets added into the equation. The age, meaning if it was 65, 66, or 67, when you factor those 3 items in, you reach your PIA, which is your primary insurance amount, or that dollar amount you receive at your full retirement age. Now, Social Security gives you some options. So we can turn on Social Security anywhere between 62 and 70 years old. From 62 to kind of your full retirement age is growing by 7 and change. From your full retirement age, let's say, is 66 to 70, it's growing at 8% a year. That is 100% guaranteed, no ifs, ands, or buts, operates like a CD growing at 8% a year. So that's nothing to sneeze at. So we certainly want to factor in, that's why I was bringing up before, where is the stock market? Did we just go through a rough patch, which I think is going to beat what Social Security is going to grow by, or are we at a really high point where I think we might have 5 years of a lull, in which case maybe we turn it on. So we have to just understand that Social Security is growing, and that needs to be factored into the equation. Now, of course, if we could turn it on between 62 and it's a lower amount, or 70 and it's a higher amount, at some point they hit each other. More or less, depending on when you turn it on, to just pick the spot in the middle, it's around 80 years old. So if you were unfortunate and you lived to 76, 77, it would have made obviously much more sense of turning it on early. If you have a very long life and you're in your 90s, the difference between 62 and 70 is a humongous number. We're not talking 10, 15 grand. It could be 6-figure difference between turning it on at 62 and 70 if you live into your 90s. Now, I would say 90% of my clients just say, oh, there's no chance I'm living into my 90s. Maybe, but like I said, we have to plan regardless if you think so or not. Statistics show people are simply living longer. Now, over the recent COVID reality, that took a peg down a little bit, but the trend is older for longer. So, in my financial plans, when I went back 10 years ago, I was statistically using 92. Now I use 95. We're just living longer. Modern medicine, it's just the current reality. Now, this is always one of my favorite slides. This is showing you, all right, when are people taking it? So as we can see, between 30 and 40% take it between 62 and 64, roughly half closer to your full retirement age, and a few people are lasting to 70. First and foremost, you live your retirement. You don't live anyone else's retirement. It should be relatively meaningless to you what Bob from the office is doing or your cousin's doing, and that's what they don't have the same financial realities. Like I said, when I factor in your scenario, it's 8 valid, important points to calculate when it needs to be done. I would say the large majority of people don't do an analysis whatsoever, which is really horrible because especially when you factor in couples, the difference is not 20, 30, 40 grand. Like I said, we're talking 6-figure differences. So please, whatever your relative is doing or your friends are doing, it's meaningless. I assure you, myself or someone like myself who has an understanding of taxes, investments, cash flow, your retirement, all the important factors, that is going to give you a meaningful number. So please don't ever worry about what anyone else is doing. It's not relevant to your retirement. Okay, so let's say you are hell-bent on turning on Social Security early, but are still working. So as we can see, if we turn it on before our full retirement age, let's say our full retirement age is 66. So if we're turning it on more or less between 62 and 65, for every $2 over this 21,000 figure we see here, they're going to withhold $1. So let's say we're in 10 grand more than 21 grand, which is not much. Maybe it's just a little part-time work. If you're in 10 grand, they're just going to withhold 5 grand. And you're probably looking at a situation where you've locked in a reduced benefit for the rest of your life. They're going to withhold money because we made too much of it. And the money they did give you, they're probably going to tax it. There's a tremendous amplifying effect every year that you delay retirement. People are always shocked when I do a cash flow analysis and I tell them, well, your budget is X at 62, but if you wait a year or 2 years, you might be 20% higher for the rest of your life. Because think of all the things that we're particularly triggering. When you're retiring early, okay, that means we stopped earning money. That means we stopped putting in our 401k. That probably means we're taking money out of our retirement account. And that means we also took a reduced benefit for Social Security. So it's not one decision we're making. We're really making kind of 4 compounding decisions positive or 4 compounding decisions negative. And by negative, I mean, hits to your net worth, and your ability to live on a higher budget gets reduced dramatically very quickly. So turning on Social Security while you're working meaningfully, we'll call it full time, it almost is never a good idea to do. Now, Social Security gives you a little bit of a break in the year of your full retirement age. So it's a little bit of a trick. So we can, all right, beautiful. Now we can earn up to 56 grand. And now we have a 3-for-1 scenario as opposed to a 2-for-1 scenario. But what they're saying is in the year of your full retirement age. So let's say you were born January 15th. Well, that means we have 15 days to enjoy this reality of this 56,000 number. Now, if you were born in December, beautiful. Now we have a much bigger chance of utilizing it. It might be worthwhile to turn on Social Security a little bit earlier. It'll be harder to get penalized from Social Security. But again, it's not a year from like your birthday that you have this reality. It's just the year of your birthday when you reach your full retirement age. After you reach your full retirement age, you can make $1 billion a year. It doesn't make a difference. They won't withhold anything from it. Now, when they withhold it, they're not keeping it. They'll give it to you kind of spread out over your lifetime, but you've kind of defeated the purpose of turning it on early because you didn't get the money And so you locked in a reduced benefit for more or less nothing. Now, all right, one of the things that they do is could they reduce it? Two, all right, now they could tax it. So let's break down how they tax it. So when it comes to Social Security, we have to figure out what is the income that they factor into the equation. So it's your modified adjusted gross income plus half of your Social Security. Well, what is this? What is modified adjusted gross income? So they add back a few things that don't normally get added to income. Municipal bonds, which are normally tax-free, they add it back. So obviously wages, business income, interest, capital gains, dividends, pretty much everything. You know, probably the better way of doing it is see what they exclude. If you don't take money out of your IRAs or 401k, that's non-taxable. 2 Roths, 3 life insurance, 4 HSAs. So almost everything gets factored into this income. Now, most of the people on this call tonight are going to probably find themselves in a situation between them and maybe a spouse of, let's say I'm doing married filing joint in this particular situation of, all right, maybe they get 70 grand of Social Security benefits. Well, half of that, like I said, how they calculate is half of your Social Security benefit is 35 grand. Crap, we're already at the 50% taxable mark. Then you factor in just a little bit of interest and dividends, or maybe you did a little part-time, and you're probably over the 44,000. You know, the sad reality is they don't adjust these for inflation, which is really BS in my opinion, but it is what it is. So it's pretty quickly getting into a situation where your Social Security is going to be taxable. Now, let me just break down how this is taxed. Let's say we find, I'm going to use an example. Let's say our Social Security is 10 grand. What I'm not saying is, and we find ourselves in the 50% taxable situation. What I'm not saying is if your Social Security is 10 grand, they're going to keep 50% of it as the tax. What happens is the 10 grand, 50% of it's taxable. So 5 grand gets added onto your taxable income. And let's say you find yourself in the 20% tax bracket. That means 20% of 5 grand, you'll owe $1,000 in taxes on that $10,000 benefit, Social Security benefit. Spousal benefit. So let's say we have a situation where one spouse was kind of the main breadwinner and was going to get $3,000 a month in retirement. And then the spouse just didn't work that much. Maybe their benefit's only going to be $800. Well, when the spouse goes to turn on their benefit, the Social Security system will say, well, we have a choice. We can get half of the 3,000, which is $1,500, or you could take your benefit. They're always going to give you the highest of the two. But we always have to remember, just like if we turn on our benefit early, if we turn on our spousal benefit early, it gets reduced. So again, the spousal benefit, let's say if only one person worked in a household, the worst case scenario, if the spouse waits till their full retirement age, would be half of the other person's. Now, in saying that, the spousal benefit doesn't continue to grow after the full retirement age. So if you're going to get a spousal benefit, you want to turn it on once you reach your full retirement age. Now, spousal benefit is a little different than widower's benefit, which I'll go over in a little bit. We don't really need to go through the numbers on this, but the concept, like I mentioned before, one of the big things I need to know is what's your benefit compared to your spouse. So a simple strategy is, let's use the same example I gave before. One person had a $3,000 Social Security benefit. The other person's is $800, or they're getting their spousal benefit. Some people, hey, I want to get some of it at least. A lot of times in that situation, I'll tell the spouse, turn on their benefit. And I'll have the main breadwinner Social Security delay. That will give them a higher payout for the rest of their life, as well if God forbid they were to pass away, the spouse goes and takes over their benefit. You can only get one benefit at a time. You'll always get the higher of the two, but that person would change from their spousal benefit over to now their widower benefit, which is what the other person was receiving. So if one of the two has a higher benefit, you want them to wait as long as possible. Survivor benefits. Well, let me touch upon former spouses. So don't ever be concerned about, a former spouse taking a benefit off of you. Other people can take benefits off you. It won't impact yours at all. It's not really taking from yours. They just use yours to calculate the benefit amount. But don't ever think, that the famous example is Johnny Carson. Johnny Carson had 3 individuals who qualified, or 3 wives who qualified because they all were married for longer than 10 years. So 3 people were getting benefits off him. It didn't have any impact on the dollar amount he was receiving from Social Security. Survivor benefits. Survivor benefits break all the rules a little bit. So like I mentioned before, Social Security can be turned on anywhere between 62 and 70. But if you have a widower benefit, you could turn it on as early as 60. And their benefit, they can turn on their widower benefits and allow theirs to continue to grow. My own mother did this exact thing. She turned on her widower benefit when my father had passed away. She collected that money and then turned on hers at 70. Like I told you before, Social Security is growing at roughly 8%. Well, she was getting the 8% plus she was receiving money at the same time. So that, I didn't calculate the number, 14, 15% rate of return, pretty good deal. So widower benefits, now the rules of working still apply to that scenario, but widower benefits is just a little bit different, a few more moving parts that we have to factor into the equation. Another thing that's a little bit of a unique situation, let's say, a lot of times I might try and push people to delay taking Social Security, but if you have young kids, and let's say are 65, recent scenario came up, client of mine was 65, and they were the breadwinner, so I was trying to wait, but they also had young kids under than 18. Well, that they're going to get their own Social Security benefits based on yours. So in terms of that break-even point of being around 80 years old, well, the fact that we got 2 individuals getting Social Security benefits off you in the terms of the children, now that break-even is like 85 years old. So that particular situation, I turned it on earlier. So if you have young children and you qualify, again, it's a little bit of a unique situation that also factors into the equation. Now, when I pick Social Security, is based on your financial plan, is based on every single aspect of your finances being factored into a cash flow. So what we're doing is saying, all right, we've decided we're going to turn on Social Security. Well, we've got a few more years of working, and then we're going to have a pension. All right, beautiful. Well, let's play this out. So if we have our incomes, which is our pensions and Social Securities and working years, and then the plan distributions are what's called your required minimum distributions. And then we have this lifestyle that we've grown accustomed to in terms of our expenses. What we're trying to make sure of, and the most important thing that I do is to say, all right, this pool of money that we've built up for our retirement, how long does that money last? In this particular situation, well, it's always a lot harder if the spouses are pretty far apart in age. Well, we got an 84-year-old and the money's run dry. Well, now we have a problem. Well, now we have to go back to the drawing board, probably maybe work a little bit longer, delay taking Social Security. So this is the most important thing I do, just making sure we can get to a realistic budget and then turn on Social Security based on that reality, having your money last into your mid-90s. So I hope everyone got at least some of the meat and potatoes of how the Social Security works, realizing that this is not a quick decision, that wrong decisions could be 6-figure losses in terms of possible income that you would have received from Social Security, and that, typically I want to have all of the important information. Like I said, it's about 8 pieces of information before I make a decision. Now, if any of you have any questions or say, Mike, I want to run the numbers, let's go through the scenario, I just want to make sure that the plan checks out. Of course, I'm willing to do it anytime that you need. And of course, if you just have general questions on how Social Security works, I am always here. In saying that, I'll take a look over to the chat box, see if we have any questions. Okay. Guys, thank you so much for joining me tonight. I am always here. If you have any questions, feel free to reach out at any time. Thanks, guys. Have a great night.